All right, what's up, everybody? Happy Friday. Happy Friday. Thanks for that GIF image right there. Stock market Wojak. Yeah, today was pretty nasty. The SP came up a little bit today. Came up a little bit from the lows that it made. Let's take a look real quick. Welcome to the live stream. This is your first time here. What I like to do is I like to start off with a little bit of chit chat, let people join, and then we're going to look at the markets Going to do a little market update for the stocks and crypto. Spoiler alert, they're down. And then later, as I said in the title, I kind of want to talk about some concepts. I think during either my live stream for the FOMC earlier this week or last week, some people asked me about the spike indicator that I used. And there's been a lot of good examples of that working this week. So I want to talk about that. And also, if you guys have any questions, ask. I like to teach. I want to get back to what I really love doing and why I started doing this, which is teaching people what I know, helping them make better decisions. So I want to share what I can to try to help people out because I've been getting a lot of questions personally and privately that I can't quite answer. And that question is, are we near a bottom? That is not something that I can really answer. I don't really want to try to answer. If anyone tries to tell you that, well, they're just guessing. But that people can speak confidently and they can come across as knowledgeable and build a following based on that. But I don't think I can really ascribe to that myself. Jen, you say you know when the bottom is in when? After Sailor gets liquidated. Yes, that is definitely a bit bottom for Bitcoin. I've got MicroStrategy up right here. Let me clear that out a little bit. So this is like a little internal joke I have with some local friends. This is MicroStrategy. A few people, I'm going to rat them out a little bit. They bought MicroStrategy as a investment vehicle for Bitcoin. I think that's a really bad idea. In fact, I know I've done some post on TradingView about it before, but I think basically Michael Saylor, he's the CEO, chairman, the big poobah of MicroStrategy. They do some software, but mainly they just buy and hold Bitcoin on borrowed money. And a couple of instances here, like back in December 2020, they spent about I can't remember. I should have noted this. This is all borrowed money, by the way. So it's not that they took out the debt, but they bought $650 million, $0.65 billion worth of Bitcoin on the way up in December. The biggest Bitcoin buy they did was on February of 2021. They spent over $1 billion in February of 2021, which was here. So around 55,000, excuse me. And this is where I really started to dislike Saylor because I had some young friends of mine that come to me for a little bit of wisdom because I've been doing crypto for about 10 years now. They said, are you buying Bitcoin at $55,000? And I said, no. And they said, why not? You know so much about Bitcoin. Don't you know it's going to take over the world? Like, isn't that like you've been in it forever? You know this. I was like, well, yeah, but I've also been in it long enough to see these up and down cycles. And when when anything has gone up this much, when anything looks like this, I do not want to be a part of it. But he went on podcasts, and in fact, this young person I talked to, he sent me a podcast. He said, well, if you don't believe me, listen to Michael Saylor. I was like, no. This guy, but I didn't even listen to him until later, but he was telling people to mortgage their houses, sell their businesses, to buy Bitcoin, talking his bag, talking his book. And the people that listen to him are at least 2/3 poorer of whatever they would have put into it otherwise today. And now you stand on the precipice of potentially another down move. Man, this thing is just holding. Oof. We'll talk about this in just a second. We'll talk about this in the crypto market look. I'm assuming by people talking in the chats that my sound's coming through okay. Good. We'll get to your question in a second, Peter. Yes, I'll get to that in just a second. I wanted to start off with this gentleman right here who I really respect. I wanted you guys to listen to this clip. This clip is about 10 years old. Yeah, November 13th, 2012, which means that he said it even earlier. Hugh Hendry is a very interesting investor. He lives down in St. Martin. This is like the image. This is when he was doing the speech, he was still in the hedge fund world. But nowadays, this is how people want to, or he wants people to see him. Let me bring this up here. So he's like in his 50s, his 60s, but trying to do this skater punk kind of thing. But ultimately, he's a contrarian. I like that about him. And he's been saying contrarian things for a long time. And let's listen to this real quick clip. And I really agree with this statement right here.
So what I want to be, and I'm going to shut up, my only point to you is that I have resigned from the professional undertaking of coin flipping. I'm not here to tell you where gold's going to be. I have no idea. That's my existentialism. I am a student of uncertainty. I have no idea where the stock market is going to be. So when I'm creating trades in my portfolio for my clients, I'm agnostic. I just want to enhance the probability that I make money come what may. And at that, I'll shut up. Thank you very much, ladies and gentlemen.
Good. Well, thank you very much, Hugh.
Okay, I agree with that. And I came to this sort of personal realization not too long ago about predicting. I know that I can take bets that have a probability of succeeding or not succeeding, and then I can manage the risk associated with them. And I think a lot of people that I talk to on a daily basis, at least that are on my Discord, we all kind of acknowledge that. We're all smart people that have been doing this for a while. We've all been burned. We all know that trying to predict something is not really going to have much use. But taking probabilistic bets in our favor with low risk, high reward, or you know what? Honestly, I got a guy on my Discord now. He has been knocking it out of the park with a Bollinger Band strategy, which is a mean reversion strategy. I don't like it because it has a very high risk profile, but it has an extremely high win rate, and that's been making him a lot of money. Either way, he's not trying to predict where the market's going to go or where the instrument he's trading is going to go. He's not trying to do any of that. He is just taking the same trade every day, and that's working out for him. So, all right, let's take a look at some of the chat things right here. Yeah, all right, Peter. Do I expect the DXY to experience a blowout top? I think that the dollar is really and truly this big story of the year. I mean, the dollar is the big story. Hold on, I think I'm getting some issues with the streaming quality on YouTube. YouTube's giving me a little warning. 1 second. It's not receiving enough video. All right, looks like people might get some buffering. Let me check my connection real quick. It's been going good for quite a while now. Haven't had any technical issues. Let's see. Give me just 1 second right here. Let me check on the technicals of YouTube. Gonna make sure that I'm going. Bear with me just a second. YouTube's giving me a little warning. No, it's coming through. Oh, the video is not coming through. Hold on. Let me make sure. No, it looks like I'm just kind of jumping around a little bit. Well, I hope that fixes it. So the sound seems okay. All right. I'm going to take a risk here. Hold on a second. Let's see if we can disconnect the VPN to try to fix the. Yeah, no, I'm not downloading anything. It used to do this a lot. Yeah, I know you can see it on there. I'm just trying to make sure that. Okay, so I think that's working there. Okay, I think we're back up. All right, good. Okay. All right, so let me check on my YouTubes. Yeah, okay, it looks good. All right, that fixed it, apparently. Good. Excellent health. Okay. All right, so let's start off. All right, one more thing in chat, and then we'll look at the DXY to start out with. And came in a bit late on the FOMC stream the other day, but you were using an indicator to find a spike on a chart. Only managed to get a quick gander. Yeah, Jib, that's actually what I'm going to talk about today. I'm going to talk about that indeed. So, okay, let's jump into it. So, first and foremost, DXY. I think a lot of people have been trying to find. I think a lot of people have been trying to find. Where's my sound coming from? Test, test, test. Where's my sound coming from? Oh, I know. I have to have the Twitter open. There we go. Okay. All right. So DXY has been on a tear. Let's do a quick little fundamental analysis for why this is. All right. So back when I got started trading, I traded Forex. And one of the key things that you learn when you're doing fundamental knowledge building about the Forex market was interest rates are what drive currency valuations relative to one another. So DXY is the dollar index. It's the index of the US dollar versus other world currencies. I have a nice little list right here of Forex, which is foreign exchange, and against everything, dollar CAD, especially the dollar yen. You may have read that the euro dollar is, wow, that really lost its peg around a dollar here. $1 here was like a big psychological level. Hasn't got there for like 20 years. Basically, if you want to travel, your dollar, if you have US dollars, are going to be worth a lot more. You can have a very nice international vacation with your US dollars. And that's because the Fed is raising the interest rate on our currency, the US dollar, whereas other countries are keeping their interest rates depressed. And in the case of Japan, even they are quantitative easing even more. And so that what that does is that makes it the dollar harder to borrow, costs more to borrow. That means it's harder to get. Demand is still high for the dollar, and the price goes up. Supply and demand being regulated by interest rates. Now, someone in the FOMC stream mentioned something about milkshake theory. It not only does it bring all the boys to the yard, but it also has to do with foreign exchange. So milkshake theory. It has to do, I think it comes from a reference from the movie There Will Be Blood, where the guy talks about drinking someone else's milkshake through a big long straw. I'm trying to find it here for you. See, milkshake theory, US dollar. The theory, coined by Brent Johnson, CEO of Santiago Capital, envisions a scenario where the US dollar sucks up the liquidity from other currencies and countries worldwide. The way that happens, I don't want to jump into this too deeply, but other currencies to keep their currencies low relative to the dollar, to keep their exports attractive, because if their currency is too valuable, it means it hurts their exporting economy because it costs more for people to buy their goods. If our currency buys so much of their goods, then wait, that's not right. Well, keeping it simple, other currencies have to defend, and what it does is it means that because there's such a demand for dollars, other countries have to use more of their money to acquire dollars, which sucks the capital, sucks their currency out of their local economies into the US. And that's good for us in the short term, in the theory, but bad because eventually what you may have theoretically is a currency crisis somewhere in the world that has a cascade effect to the entire world. So again, it's FUD. I don't know if something bad is going to happen. This is above my pay grade, but that is the theory, milkshake theory, that as the dollar goes up, it is going to suck every other currency into the abyss of our economy. And that's maybe not good, but we shall see. All right. So the DXY, though, is a representation of the index of all of these together. And when is it going to stop? When is it going to have blow off top? Well, I'll say this. Whenever I see an instrument have a chart like this, I don't want to go long. It's been going up for a very long time. It could keep going up for a very long time. But at this point, the reward risk is not favorable to go long on something like this. Now, we can look in the past to look at some resistances to see what may happen we got to look back quite a while. This is the monthly, so we got all the way back to a quarterly. And in 2000, 20 years ago, we had highs, a nice little resistance level back here around 117 on the DXY, which was the halfway point, and the DXY is what I've been encouraging people to do for a long time, which is start looking in the Forex market and start looking for some sort of like the dollar yen, USD, JPY, or the euro to start to invert. Now that's going to be reflected in the DXY, but the dollar yen this week, 22nd of September, yesterday, it looks like it has a little bit of a spike up here. Now, this doesn't really, I'm noticing this right here with my eyes on the dollar yen. This is actually starting to spike out. In other words, you have this high on September the 22nd that poked its head above the range that was being established here and then closed back down. This is typically a sell, a sign of reversal. Now, I bet the reason I'm not seeing it on my indicator is because of, what I typically want to do is I want to have a set ATR clearance. And I'm going to talk about this later in the stream. Let's see. I think we're losing YouTube again. Okay, that's YouTube's problem. Sorry, people on YouTube. TradingView is far, far superior. Is it dropping on TradingView too? Damn. Then it must be a TradingView problem. Starlink internet. Well, yeah, the ping wouldn't be that good. Let's see if we can get it to come back. Hold on. Okay, yeah, it dropped out there for a second. Yeah, I see it on TradingView right here. Yeah, it keeps going up and down on TradingView. Come on, TradingView. Let's go. Get the hamsters going. Okay. So this in isolation, this is the pattern that I like to look for. In other words, you have let me get my drawing out here, right here. You have a range of price here. Let's dig down to the 4 hour. Okay. A range of price. Basically, price catches itself in a little range. And then you have a spike up, and then it shoots back down. In other words, a bunch of people started buying this instrument up to here, only to be stopped out, and now they're back below the range. This is actually a good short signal. So, to your question, I'm glad that you brought that up. You asked me about the DXY, and my brain immediately went to, okay, DXY, really fucking bullish. Oops, should have said that. But we should look at the component parts of DXY for opportunity. That's the same way I look at ETFs. Like, I'll look at a sector ETF of stocks, and it will give you a nice broad view of the sector itself. But looking at the component stocks are oftentimes where you're going to get that alpha, where you're going to get that really outsized opportunity. And as I look at this, I'm going to make a note of this. This is something worth watching. This is Friday. The Forex markets close in about 37 minutes. How about now? It just disconnected and said connected. Yeah, the lizard people are taking my stream down. How about now? Are we back? Magella, Stone Pilot? No, I'm not on DSL. I'm on cable. The bandwidth on TradingView keeps going up and down. Hold on a second. Let me take a little look at something right here. My down speed is pretty good, but that doesn't matter. Let's see. Up speed. Up speed is pretty consistent. That doesn't tell me anything. I'm thinking it has to do with just TradingView today, unfortunately. Okay, so I'm back. Yes, back, question mark. Everyone's spending their weekend Googling why their retirement is in the shitter. Yeah. Streams have been going really well for the last few weeks that I've been doing it. I hadn't had this problem in several months. Maybe time to actually get like a streaming software. Yeah, Discord's still perfect. Yeah, so it's not me. It's got to be TradingView. So what I think I may need to do is I may need to do what I've been meaning to do, which is get streaming software and then send it out to YouTube and TradingView like that. And then if one is breaking, not everything breaks. So yeah, let's see. You're good on TV now? Okay. I'm going to continue. I'm going to barrel ahead and we'll fix it. We'll fix it some other time. But little plug, I do stream this on Discord when I do. Check the link below. I don't charge for my Discord. I just want to hang out with people and share ideas and have good streaming quality. All right. So to wrap up, good we looked at the DXY because in it, by doing a little bit of mental work, looking at some of the component parts, I think we might have a trade in dollar yen. This is exactly like I said in the beginning, or Hugh Hendry started us off with. I don't know which way the dollar is going to go, but I know that if I were to enter a trade on the dollar yen, if I were to bet on the dollar going down relative to the yen, if I started the trade right now at 143, I know that I'll be wrong at 146. In other words, it would look a little something like this. Short it here and put a stop up here. And then we're going to look for a target. Typically what I'm going to do is look for, I'll come back, my risk reward. There we go. Let's see. Visibility, put this on the days and the weeks because it's going to take a while. Yes. And I would look for, what I typically like to do is this last leg, 50%, but that's not going to give you very much movement. The big move down over a long period of time would be something like this, down to 127. So if I was a macro Forex trader, I would want to set up a trade that looks something like this, where because we had that spike up, we know where our stop needs to be, we know where our risk needs to be. We can short it here, and then we're going to take it back down to the 128. In other words, a bit of mean reversion for this huge trend that happened. You know, this thing could take a while to happen. If it took about this long to happen, all the way down to here, then it could take also about 115 days to come down here. So yeah, this would be something I would look for maybe to start next week. I mean, we may be at an inversion point. Every week may be the inversion point, especially as we get into October. We're about to get into quarter four. This year is almost over. Wow. This has been one of the fastest years I think ever. Maybe it's because I'm getting older. All right. So let's continue on with the, while we have good connection, let's continue on with the market update. All right. So back to ES. Beep, beep, boop, boop. Pew, down we go. Okay. So last week I talked about how, last week, what day was that? That was the 16th. The 16th was here. Let's go back to that day. So this is what we saw on the 16th. We had a little dip, and you guys know if you watch my analysis that I'm looking for price to be below the Ichimoku cloud right here, but I also want to see momentum get out as well. All right. NASDAQ, same business. NASDAQ did the same thing where on Friday of last week, the 16th, it poked its head below the cloud, but did not go below it there. But as the days went along, on Wednesday, when we got that Fed interest rate decision, which the market had basically already priced in from this point right here, when they got the inflation number, we knew that a rate increase was coming. That actually poked it below it. And now we're coming back down to try to retest the bottom, which we basically did today. So there wasn't much money to be made in the longer term shorting this down to the lows, because now we start getting into what could be a double bottom on both the NASDAQ and on the S&P 500. We actually came down to what I mean, the bottom proper is about right here. But if I'm a trader and I'm trying to play the bottom, I'm going to look at something like bear with me just a second here. I'm going to look at this reaction that we had back in June, the June lows. So here's what the June lows looked like. You basically had a double bottom on the 30-minute, boom, boom, all right? And so rather than try to play the very tippy bottom, I'm going to look for the middle of this price range right here where most of the trading happened. And you can even see that's where this bull trend launched from. Let me clean this up a little bit. Clean it up for everybody to look at. All right, so basically it comes down and you have this range that sets up right here. Price makes a double bottom, 2, and then off of the 50% level of this range is where it actually launched for everyone to breathe a sigh of relief, and we get a recovery through the summer. So the levels that I actually think are significant around that little bottom right there is this level right here, this level of that price action. Now, if we go forward to today, we see that that is basically where it found and where it's trying to bounce off of. Now, it could come back down into that very low 36.43 down there. It could come down to that. But if I was short and I was looking to take profit, I would have looked for that level because there's going to be a higher probability to hit. So that's what I'm looking for in that. So we may get a little bit more movement coming into next week, but it could actually be bottoming out around here. So we need to watch and see if we have a daily bar close and or next week close below this low to know if this is going to go any lower. So we have a potential chance at a bottom. We do. There's a chance. There is a probability here. And it all comes from that inflation print on Tuesday, September 13th. Once we had higher inflation, we knew the Fed was going to raise rates. They did. They raised it exactly what the market said they were going to do. So the market came down to retest the low. Now we got to wait for new information to come out. The information coming out should be another Fed meeting next month. In the meantime, I don't think we've actually gotten into earnings season. So let's take a look and see. Where's my calendar? So the calendar for next week, let's see if we have anything coming up. Powell is going to speak at 7:30, but I don't think he's going to say anything new. He does speak on Wednesday, so he's going to be talking a lot, and that could move the markets indeed. But nothing really major. No inflation reports, and no. Is there a CPI announcement this week? Next week? I don't know. I don't see it on the list here. So next week may be a little boring. So we may have a little consolidation week. Okay, crypto analysis. Well, not much has changed. In fact, it just gets precariously closer and closer to the June lows, a lot like the stock market. It could hold here, just like the stock market could hold. They're very, very correlated now. You haven't seen some things in Atom, actually, Jen, as a matter of fact. We'll look at that. But, everybody got really excited from this non-secular trend. I read a lot of Bitcoin Maxi chats, and they got really excited in this little early September bull run. They were really patting themselves on the back that they were in this. But yeah, nah, it's not really holding. It's not really holding up. Down it goes to retest the low. Ethereum, the merge went off, but this thing has already started trending down. So Ethereum is trying to retest its low of 1,000. And that is basically just the highest probability thing that you can expect. I'm sure a lot of people don't want that, but this is what the trend is showing. The trend is down and it's continuing. Now, any number of things could happen. If you get a bad world event, you can definitely expect the stock market and crypto to crash, but everything is coming down to a low, a retest of the June low. Is there money to be made shorting down to that low now? No. That's, again, comes down to the probability and the risk reward assessment. There's not enough reward in shorting this from this point to make it worth it shorting. Do we want to go long? Well, that is a high reward but low probability bet. So it's a high risk, high reward bet because you have a lot of upside, but at the same time, let's just say that we did like try to go long Ethereum. Well, we've still got to contend with the highs around 2000. So if I was going to do, let's say, a long trade, again, if I didn't know which way I was going to go and I was going to structure a trade, I could reasonably say, all right, I can get back up to here. I know a lot of people want, their Ethereum purchase to go up to, 40,000, but reasonably as a trader, you need to play back for that high up there around 2000. And then you need to get out of it if it breaks your reversal point right here. And that ends up being about a 1.5 to 1 risk reward. Not good. I don't like it. Bitcoin, on the other hand, as it approaches the low, it's a little more favorable, honestly, because let's just say that you went long here. You know that you need to get out if it breaks the June low, and you're going to play it back up to here. Now you actually have a potential for a 3 to 1 back up to the high of the range, because really and truly, when something gets into a range like this, it could stay in the range for quite a while. It could come up to the range, and then you could be back right back down here towards the end of the year. You don't know. You can't play a breakout until it happens. You can be patient, you can sit in it, you can wait. But if you want to have a structure around your trade, that's what you need to do for your targets. All right, so that's the high level. Let's look at the specific ones that people want to take a look at. So Atom, I've been getting a couple alerts on Atom. That's because I watch it. Yeah, we'll look at Jeremiah. Before I discuss Ripple, what do you want to discuss about it? Like what is I don't follow Ripple news. The last thing I heard from was ages ago that they were in hot water with the SEC. Has something changed in that department? You got to tell me. Tell me, educate me on it, Jeremiah. Let's see, crypto Atom. Where's Atom? There we go. All right. Oh. In spite of all this, Atom has been slowly taking up. That's the thing. There are some cryptocurrencies that are outperforming the blue chips right now, and not in a hockey stick fashion. They're actually kind of trending upward. So Atom has held these supports right here, being at 13.7. It looks good. That looks really, really good. That looks really, really good. In fact, basically, if we look at this coming from this leg down right here, I would say that you don't have a resistance until about 19.41. So Atom's actually got some room to go up. And if you're betting on cryptocurrency recovering, it would stand to reason that this would actually be a better bet because it's already trending bullish. And in fact, if you had Ethereum and Bitcoin go up, this thing could benefit pretty well. Ethereum is trash. Yeah. All right. So let's take a look at some other stuff. Anything you guys want to look at, call it out. Call it out. Let's look at Ripple because you asked. Ripple US dollar. Oh, that's why we want to talk about it, because it had a little moon. Okay. I see. Why can't you come in the chat last week and tell me about your Ripple? Why you got to come in when it's already up? From last week, September 16th. when it already popped up 61%. I want to hear about it before it pops up 61%. I don't really want to chase it after it already does. Yeah, it's definitely pumping. It's definitely pumping. Let's see, where can we go reasonably? Well, from the leg down to here, I would say if you're in it, you need to look at 0.6. 0.6 is going to be your next resistance level for even this trend right here. This is one of the ones where we can use this actually as a learning experience for Bitcoin. So in other words, keep in mind this concept right here. It comes down, test lows, test lows, test lows, test lows, and then you actually have a breakout. Okay. And so it's not a bad idea to take something on a breakout. Like here's the high that you're keying off of. First poked its head out of the cloud right here. Okay. And again, the reason Ichimoku fundamentals, to your point, Raka, since you asked. So price poked its head out of the cloud here back in August, but your momentum, your lagging span was still in the cloud. That's not a bullish sign. And so this would have kept you from jumping in too early. But jump forward to the 20th, which was Wednesday of this week, Tuesday of this week, when you had this green bar right here poke its head above this last high from July. Not only do you have price above the cloud, you also have momentum, nice and clear space, and that can signal for a breakout. Boom. So this would have been a very good breakout trade, actually. But I didn't have alerts for this. That's because I only watch a few cryptocurrencies. I can't watch them all. But that's interesting. But if I was in this trade, I would definitely start getting defensive, moving up my stop or taking profits if and when it gets to 0.6, because that is the clear halfway of the leg down. That is the 50% retracement back up to that level. So may have some leg left to it. Would I take it now? Probably not me. But if you are one that wants to chase momentum, if that is what you get your jollies, then I would look at something like this. Probably what you want is to it not come back and breach the high that it broke. Do not breach the high that it broke. You don't want it to come back on you all the way. Okay, so this is how you can play something like this without really risking yourself of ruin. If you wanted to jump into something like this, you know where your stop needs to be. Your stop needs to be if it breaks that high that was broken. Because if it comes back there, it was just a fake pump. Nobody's buying it. You don't need to still be in it. It's just that simple. But your profit target, 0.6, and then maybe kind of trail that up a little bit. So you can maybe get like a 1.2 to 1 on something like that. But this would be the logical way to try to jump in this thing if you really wanted to. I'm not going to do it. But if you really want to, I'd recommend you do it something like this to keep yourself safe and give yourself a good chance at making money on it. What is the rumor, Jeremiah? Buy the rumor? What's the rumor? Is the rumor that they're going to get the, all clear from the powers that took it upon themselves to regulate this? I hate it that that's an issue. Yeah, you're welcome, Jeremiah. All right. So, yep, that's what I'm here for. That's what I'm here for. Give insight. All right. Anything else? Okay, let's take a look. Do we have pins? My Jello wanted to look at pins and LLY. Pinterest? It's doing its own slow cloud breakout. Pinterest is kind of on the way up. I'm wondering when the Becky index is going to come back in favor. I kind of actually want to start looking at the Becky trade again, because the Becky trade has, well, like all things, and especially more so these, really fallen out of favor. And the Becky trade, for those that don't understand, Becky is investing in stocks that sell things that women like, because women are the primary consumers of our economy. They spend most of the money. I don't have the number in front of me, but it's more than men. That's because, as I've been told, I have beer taste on a champagne budget, whereas women sometimes have champagne taste on a beer budget. And that worked really well. The Becky Index, which would have things like Pinterest and Twitter and Facebook and Apple and what are some of the others? Ulta makeup, TJ Maxx shopping. I mean, those all worked really well until they didn't. And like everything else this year, it's been getting hurt pretty bad. But you know what? The fundamental thesis of Becky, $Becky, the Becky Index, is a sound one. You're already in a Coty call. Coty does what? Is that makeup? COTY? Makeup, yeah. Um, yeah, it's been getting really hurt since the beginning of this year. But hey, makeup. Why not? People are always gonna want to look pretty, right? All right, let's see here. What else we got on the list to look at? LLY, LL Lilly, Illy Lilly. Um, this pharmaceutical companies are in a nice, strong uptrend. Slow. It's a blue chip stock. It's been holding its ground this year. I mean, for 2022, pharmaceutical companies have been doing very, very well. I think they're having record profit margins this year, despite Biden claiming victory over them. It's kind of caught in a range right now, around 310. It looks like. Uh, I'm bullish on pharmaceuticals. My pick is actually Bristol Myers. I got long on these back at the end of August on a setup, which is it was a spike, which I wanted to actually talk about and keep an eye on. But pharmaceuticals are good. In fact, is there a? Let's take a look right here. Pharma ETFs. So ETF DB. Pharmaceutical ETFs. Let's take a look at pharmaceuticals in general. So I like to use etfdb.com to look up all the different. It's a very good repository for finding the answer to what I was just about to ask. Where do I find pharmaceutical ETFs to take a look at to see what the strength of the sector is doing? So the one with the largest assets under management, we could either do let's do the Spider XPH. That should be pretty equally weighted. XPH. I bet it's going to look good. Well, it's kind of hanging out. I wonder what is dragging this down. I wonder if these pharmaceutical ETFs have some non-blue chip ones, like some of the more biotech speculative ones. I wonder why. That's interesting. Or I could be looking at a potential opportunity here. In the long term, the boomers are going to keep spending money trying to keep themselves alive. So, yeah, I think it's probably a good bet. But Bristol Myers is my pick right now. So I'll just keep it at that. Ford. Let's take a look at Ford. Ford was at a good level. What I would say on Ford here, I'm not in Ford at the moment. I think it probably should have held earlier this week because when I'm looking for a reversal, this is a good example. You have this big, long downtrend. Okay, let's take off that. All right. You have a long downtrend that came from this high up here. Okay. And it's making a recovery. What I'd like to see is for it to recover, hold a level, and then go back up. But rather than do that, rather than hold this trend, this July through August trend, which the entire stock market held, it looks kind of like the stock market really. It comes down in June, middle of summer, pops up middle of August, and now it's coming back down to retest the low. I would have liked for it to have held here at 1365 to go back up, basically held at least the half of this leg up. Because now what you're starting to get into is testing these lows. That being said, you have this little launch point right here. So I would say a good level on Ford, if you wanted to play it, play this low, is around 1122. I would look for it to maybe come down here to 1122. And looks like you got earnings coming up at the end of the month of October. So may sell off into there and then see what happens there. That's what I would kind of be looking for it to happen. Because basically you're kind of in between spaces here. Like you had this trend, it came down, didn't respect it. And so now you're in sort of this little valley here where there's really nothing. I mean, you can find some highs and lows for it to go off of here, maybe, but that's just what I'm going to estimate it as. And so maybe I'd try to play the low down here. But until between here and there, you're just kind of in no man's land. So that would be more optimal for me, is around the 11.22. That's what I look at going forward. Net. Oh, Alcoa. Okay, let's get Alcoa first. You're yelling at me. Alcoa is materials. They got taken out of the. It's funny. They got taken out of the S&P 500 index. They used to be the bellwether. They were not only like the first stock in the list because it's AA. They were also the first one to announce earnings, and they would every earnings season, Alcoa would kick off S&P 500 earnings. But then Standards and Poor decided to take them out of the index because they were down here and below the tens. I can't remember when they took out. Let's see, Alcoa removed from S&P 500. They take stocks out that are underperforming because they don't want it dragging down the whole S&P. And Alcoa was dropped. Oh wow, this kind of dates me. They were taken out of the S&P in 2013. Okay, yeah, so I'm a boomer here. Yeah, so they got taken out of the S&P back in 2013 because they had this big crash in 08 and they just never recovered from it. So, oh, that's funny. So they got taken off the S&P in September 20th. Somewhere right here. So they got taken off the S&P and they went up from there. They came down a little bit lower in 2016, but and then they very volatile, man. But this right here is that whole materials run with copper, and I think they produce a lot of aluminum. Yeah, aluminum's their primary thing they produce, and with supply chain issues and inflation, they've definitely benefited from it, but it's coming back down. Let's see, what are we coming back up to here? This is one of those situations where, again, you have this trend up and it comes down. See this all the time. It really should have held at 52. There you got the price inflection here. Actually, this is pretty clear. It should have held at 52. All right. The levels that you have basically back here, you have this little inversion, and then you also have this little inversion right here where price comes up, hits it, comes down, holds it, breaks through, comes down, launches from there. And so when you came down and break the 52, comes down to around 44, holds, comes back up, can't recover there. And now it's back down. It's trying to get to 31.35. So not quite at a level just yet. What were you seeing, Jen? I keep getting the 50% dings this week and last week. They're a drilling company now. Might short a bump up if we get one. Yeah, you could probably take it back down to about 31.35. I thought you were talking about buying it. So, yeah, this is kind of breaking out. This is doing the same thing that Nvidia did. Yeah, I mean, look at that. It's basically you break the 50%, you come back to retest it up, and then you just enter into the valley of risk where you don't know where it's going to stop. And that all comes from that failure to hold the halfway point of the trend. And then it comes back up, retests that break level, holds that break level as resistance, and then down it goes. That's your opportunity to get out. With Alcoa, not a buyer because, again, it came to its break level, 51.48, held it, down it goes. So this is not a buy for me on that. So yeah, Nvidia, just real quick, I just happen to be using an example. Nvidia is an example of that, where Nvidia comes up, has this big, long, bullish trend, fails to hold it, breaks it, gets below it, comes back up on the 189, 190 level of NVIDIA. That was the last opportunity to really accept that this thing was not going to retest it high. And now it's just going to keep going down. I mean, on NVIDIA, we can look at it to hold the low from March of 2021. In other words, come down a little bit more to 116.65. But if this does not hold, if NVIDIA does not hold the levels it's approaching right now, the 120 or 116.65, then yeah, I mean, it's just going to keep on bleeding. I mean, I know a lot of people that rested their retirements on NVIDIA that are asking me, what do I do? And anything you do at this point is going to be wrong because you're emotional about it. It's already broken the trend, the uptrend. It's going to remain in a downtrend until everyone is out of it, basically, because that's what a bottom is when everyone sold it. And even then, it may not recover for months or years. So I don't know what to tell people to make it feel better with NVIDIA. The dream of 2021 died, and you just got to make some. If you want to own the company, you got to stop looking at it. But if you think your money can do better in something else, if you can take that capital and trade it into something that's going to give you a better return, which I would encourage, find better opportunity. That's the best thing I can say about NVIDIA right now. I mean, maybe it's going to hold 116, maybe it won't. But you're in a very precarious position because, yeah, it's in a downtrend. What are my thoughts on? All right, let's take a look. Jose, you're doing a school project. I'd like to see that school project, Jose. I like to see what you're doing actually. All right, gold, and then we'll look at Adobe. All right, so gold. I'm pretty consistent with my opinion on the precious metals. To wit, they are going down. And it's that narrative that inflation is so rampant that precious metal, if there is inflation, then you need to buy precious metals. I've got my silver coin right here. This is silver that I own. It was given to me by my grandfather. And I have a gold ring right here that was my father's. These are basically the two precious metals that I have for sentimental value, but I don't own them in any meaningful capacity. In fact, I am still short silver to the end of this year because silver is in a downtrend. It broke 21. Again, get to a key level. You can see it. Boom. Hits that key level, holds it, gets back below it. Boom. Creates that resistance, and down it goes. Same play as NVIDIA, same play as Alcoa. So gold specifically, I know a lot of people were trying to play gold on this run up here back in March of this year. But that long daily, or excuse me, that's a weekly, that long weekly wick where there's some kind of meme going around did not manage to break. Oh, let me clean up my alert there. Did not manage to break this high set in August of 2020. You see that right there on the gold futures. Just didn't quite get to 2090. Failed. Get out. Double top. And so, again, get asked this every week. Don't mind answering it because it's a great teachable moment. But typical double top theory, that's what you have right now on the weekly chart of gold. Come up one high. There's your neckline of the double top. Second high. And so what you do is you measure from your highs down to your neckline. And then once this neckline is broken, which, once this neckline is broken, that's what your potential profit target is. I think a lot of gold bugs don't want to hear that, but this is just theory. I don't know, but double top theory says gold's going down to 1264 over probably a few months because this is a weekly chart, but This week, September the 23rd, this weekly bar closed below your neckline on the double top. So again, like I started off this live stream by saying, I don't try to predict the future, but if I was going to be in a trade, I would say that this is a high probability bet that this is going to go down because it has broken the low of the neckline it established back in early 2021 through here. I mean, you can see the price respecting that 1676 level. And then this week, we closed below it. Now, what you might want to look for is again, that standard pattern where you come down, maybe come back and retest it. Maybe if we come down a little bit, do a little bit of turn, and then come back up here, and you can watch it very closely to see if it does actually start to recover. That'd be okay. That'd be good. But if you get like a test of it and then it comes back, get out. That's definitely going down because that's going to establish this level as resistance. So if you get any sign that this is going to be resistance once it comes back to retest it, if it retests it, stop listening to Peter Schiff. Like, I don't know why gold is going down if inflation is going crazy. I don't know. I don't know why that narrative is failing, but it is. And man, it's funny in that talk earlier that Hugh Hendry, they made a joke about how when people become gold bugs, they stay gold bugs for the rest of their life. Maybe that's true. Maybe that's going to be true of Bitcoin people, whatever. But just wow, what a weird year this has been, really and truly. Like, history is going to be very clear to us in a few months and a few years from now why in an inflationary period gold was going down. It's probably going to have something to do with interest rates. It's probably going to have something to do with yield curves, all above my pay grade. Maybe someone smarter than me already has the answer, but you know what? They're not sharing it because look, it's hard to find good information now. It's hard to find good information because the people that are actually making outsized returns, they're the contrarians, and nobody wants to hear what they think because they're against the mainstream narrative. Mainstream narrative right now is that we're going into a recession. Maybe so. But because it's mainstream, I got to doubt it. But as far as gold goes, if you're a gold bug, you need to be really, really careful. You need to be really, really careful. It's just my opinion. You know, if you still think that you got to have hard currency, if you still think the world's going to end, have it along with your guns and ammo. But as far as the chart pattern goes, it's getting more and more clear. It's been clear to me in silver since June, and gold is just making lower lows and breaking levels. Okay. Adobe, and then I want to talk to Jose, and then of course I want to talk to Dr. Chelsea. ADBE, Adobe, again, look at that. Again, that August move up, you have the break right here of the level. You came back to retest it, and then down it goes. 450. So where is Adobe going to go? Well, you might get some support around 259. Everything is looking for the next support. Stocks, crypto, tech stocks, they're all, I mean, just based on everything that I'm looking at in this live stream this week tells me next week is probably going to be a little bearish. Not huge because there's no big news events that can really shock the market outside of, Russia launching nukes or something like that. But I think we're just going to kind of grind a little bit more. All right. Hey, you're welcome, Sagara. You're welcome. That's what I'm here for. Okay, Jose. Jose, we get $250,000 to invest, and it'll be great on a curve based on return. I was about to go into NVIDIA. It's funny. I did this in high school myself. I'm not sure if you're in college or high school, but in high school, and maybe this was a sign of things to come, we were given the same assignment where we were given like a practice portfolio to invest in. And I happened to be in high school around the .com era, towards the beginning of it, the late 90s. Right. High school? Yeah. Okay. So when I was doing it, everyone else, and here my incentive was this. Uh it was kind of like one of those free learning kind of Montessori kind of things. I was in special ed. I drove a little short bus to the gifted program. And so we had a lot of different assignments. And so we either had to do a book report, or if we won this competition, if we had the most valuable portfolio by the end of the semester, we didn't have to read the book. I'm in. I didn't want to read the book. I don't remember what it was, but I'd rather trade than read books. Sorry, I'm illiterate. Adult illiteracy is a big problem. I go to sleep when I try to read. And so I invested in the stock KTEL, which is definitely not in existence anymore. But all my other classmates, they took all the investing advice. They bought Coca-Cola. They bought, I don't know, whatever was like blue chip good investments at that time. And then at the end of the semester, I bought some of the standard stuff too. I wish I still had that. I wish I still knew what it was and the performance of it. But that KTEL stock, that thing mooned like a crypto. It was basically looked like a hockey stick. And so even though I maybe put like 5, maybe 10% into KTEL, it 20x, 30x basically. And so my portfolio blew everyone out of the water on that one stock alone. And I won. I didn't have to read the book. So if I learned anything from that high school example, is you really just need one a big winner. So what advice would I give? I would say try to try everyone in your class, answer me this. Can you invest in just stocks, or can you invest in other stuff? Answer me that. Jose. Can you invest? Is it open ended? Like you can invest in crypto, you can invest in gold, or is it only like ETFs and things that you could put in a standard investment portfolio? Only stocks. Okay, that helps. Because yeah, honestly though, like they probably should let you do some crypto or something. But anyway, whatever. It's your teacher. All right, listen to your teachers. All right, so I would say if you're trying to, okay, do a little bit of research. Find out what your friends are trying to do, what your classmates are trying to do. Make it a little bit of player versus player. See if they're doing like mine did, where they like try to follow like Warren Buffett style, low volatility kind of stuff. If that's the case, then you probably want to structure your portfolio to win. Basically, you're trying to win, right? So structure your portfolio kind of in a competitive way. And by that I mean, find out what they're investing in. Um, like if they're investing in Coca-Cola, Walmart, tech stocks, that kind of stuff, and try to baseline your portfolio around that. In other words, create like a 60%, 80%, the majority of your stocks to look like the rest of your classmates. Okay. That way you're going to be in the running no matter what happens. You're going to basically be average. Okay. But then find you one or two long shots. You may lose, but find you that one or two long shots that they're not looking at that could really go nuts and blow you out of the water. Because the worst that can happen is if you have a portfolio weighted just like everyone else, you're going to perform like everyone else. Okay. And then, like, if it's graded on a curve, I don't know what that means, but you'll be at least in the running. You won't lose. So that's fun. Hey, make sure you're on my Discord. I want to follow the progress on this. I want you to send me your portfolio one way or another, and I'm going to set up and I want to watch it. The only problem is I don't know how to find long shots. There's a lot of cheap stuff, and again, I totally just got lucky. Okay, I don't even know how I picked it. I was 17 years old. It wasn't like I was sitting there reading the Wall Street Journal. But I think that Nvidia is just a little too common right now. It's a little too basic to be a long shot. Let's see. Tell you what, talk to me more offline about this. I'm not going to cheat for you, but this has got my brain going, because that's a good question. Yeah, because yeah. Oh man, It's making me smile because I remember that in high school. I remember that competition. All right, I want to talk to Dr. Chelsea here real quick. The high on a curve means the highest return is the 100%. Everyone else is, oh, so nobody fails. Okay. Well, still, let's win. All right. Nvidia long-term investment, 5 years. Yeah. I mean, Nvidia's not going to go away. All right, wait on the gold there, my friend. You're also sitting in a major long-term gold support. Look at the 50-year. You say gold goes higher? All right, we'll see. Yields are backing off on the 10-year and the dollar weakening against basket. Yes, actually, I think you came in a little late, Dr. Chelsea. I was looking at the DXY. Someone asked me about this, like, do we think that we're going to have a blow off top? And my initial thought was, okay, I don't want to long a chart that looks this way. And let me look at the individual components. And so I said, well, the first thing, the one I know that's going to be the most crazy is the dollar yen. And whoa, what do we have on yesterday's bar? We have a little price action that started to set up here between 141 and 144, a little spike above it. That's my setup. And this actually sets up a high probability reversal here on the dollar yen. So I'm going to be looking at this on Sunday night. So the dollar, it could actually be weakening, and I think it might start here in dollar yen. So that's how I started off the live stream here. I'm glad someone pointed that out to me. All right, question: why did gold go down? Answer: crypto drained like liquidity. Totally agree. I've been saying that for a long time now. That especially back in 2021, it sort of crystallized to me that the narrative that you needed to get your wealth out of dollars because it was going to be inflated away, which funny, the dollar's been one of the best performing assets of 2022, but you had to buy crypto because they couldn't print more Bitcoin, by extension crypto, because reasons. But yes, I do believe that gold was the anti-inflationary, anti-Fed choice of boomers. And this younger generation, Gen X to some, Gen X are still pretty precious metal buggy, but millennials especially, and Zoomers for whatever couple bucks they have. But millennials especially, I don't think millennials are particularly as interested in owning gold as they are owning crypto. I agree with you completely. I've been saying that for a very long time, that crypto has, basically the market cap that's been pumped into crypto is coming from people that want to find alternative investments to stocks and bonds. And, it's a competition. It's a competition for liquidity. It is. And very certainly the money that would have gone into gold has gone into crypto. I mean, there's trillions of dollars now. What's the total market cap of crypto? Hold on. Total market cap of cryptocurrencies. The global cryptocurrency market cap today is, what is today according to this? What date is today according to this? Okay. So the total market cap of crypto, I'm sure I could pull it up on TradingView, but is about $970 billion. Okay, so under $1 trillion. Okay. Market cap of gold is 10 trillion. So okay, excuse me, under $1 trillion. Okay, so a little under $1 trillion versus almost 11 trillion. So 9%. So well, now we're getting into some speculative numbers here, but who knows where that money would have gone. But it's a significant amount. Let's just say that half of that that went into crypto would have gone into gold. That would be another 5%. So yeah. 10-year just cracked out of the bear flag. Do we go down with yields in the US dollar next week? Yeah, it's going to be very interesting. Next week, I think, is going to be a little bearish, but not much, because we just don't have anything major coming out until October, when we have another Fed's rate decision, and we have earnings season starting to kick off. But I am going to be looking at the dollar. This dollar yen is the most interesting thing that I noted down. All right, let's check Discord chat real quick. I see that Vixteen has joined the chat. Yeah, actually, I did ride the short bus a little bit. YOLO the entire account, and what is TQQQ the inverse? TQQ is the ultra leverage QQQ. Okay. Yeah, Jose. Well, if you're not going to fail the class, yeah. Oh, this is interesting, Jose. I want to talk to you more about this. I didn't want to tell you what to do, but I want to kind of explore some things to make you think. Yeah, because this is just fun. It's fun to talk about trading when real money's not involved. So, all right. Hey, what's up? Okay, welcome. Glad you joined. All right, cool. Well, talk to us more about it next week. You'll probably have to start doing everything next week, right? Making your choices. All right. Well, wow. You guys have kept me busy talking this whole time. I've enjoyed it. So thank you. I'm going to start wrapping things up because we're well beyond the 5 o'clock mark. I'll end it on just a single point. Let's see. What is the case that I want to do? Oh, yeah. So I did want to talk about real quick before I finish up. If you got any more questions, put them in the chat. I'll hang out with you guys for a little bit longer. There's one thing I did want to talk about, and that was the price action of the NASDAQ futures right at the Fed announcement. Classic spike pattern. I want to go through it. 1 second. Uno momento, por favor. Okay. Where did that happen? That's 20th. Oh, it's yesterday. Okay. There we go. Okay. All right. Was it the NQ? Where's the ES? No, it's the NQ. Okay. All right. So all right. Here is how you play news events. We're looking at the NASDAQ right before the Fed news announcement, before they announced that they were going to raise rates. Everyone knew it was coming, but no one knew how much it was going to be. So it was going to be an event that shocked the market. 1 minute before the Fed announced at 1:59 p.m. 21st of September, you had a spike up. A bunch of people bought in to capture potentially a move up, and then it got slammed back down. That triggered off the spike indicator where it showed that everything got bought up only to close this bar back inside the median in that same bar. And from that point on, it tanked, at least down to a support. And that was really key, looking for that 1 minute where people get faked into a particular direction. That was the trade for the Fed announcement rate. So I thought that was really cool when it happened, and I live streamed it. You guys saw it if you were on that stream. So that was a pretty cool setup. All right. Well, Jose, I look forward to talking to you a little bit about it. It's the grade for your final, and we start picking which stocks Wednesday. Oh man, you gotta buy stocks on Wednesday. I hate buying stocks on Wednesday. That's like one of my rules to not buy stocks on Wednesday. Okay. Is this okay? So this is when is this to, by the way, David? Is this to next like summer of 2023, or is it till the end of the year? You're probably going to be a little delayed on YouTube. But yeah. All right. December. Oh, we got 3 months. Let's do it. All right, let's make you some money in 3 months. Okay. Well, thanks everybody for joining me on this Friday. It's warm, at least here in Atlanta. I hope you guys have a great weekend. Go out and enjoy this fall weather. It smells nice. It feels good.